Ahoy there, traders. Hello, hello. Welcome again. As always, thank you for taking a moment out of your day, your schedule. There's always something else that could be done, and it's really appreciated that you've decided to spend some of your day with me. So thank you very much. So let's be fair, let's dive straight in. No preamble nonsense this week. We're going to be looking at panning for gold. And it's just a fancy way of saying, let's go find some stocks. So usual schedule, appreciate that one or two of the people in attendance, it may be your first time. And the way that these sessions usually go, you're looking over my shoulder. We're going to be having a little look at the charts. And if we can find something to trade, we will. But we're going to be looking at the charts. We're going to be basically panning for gold. We're going to be looking at swing trade systems and scans this week and see if we can land ourselves a big chunk of opportunity. However, if this is the first time that you're in attendance this week, I'm not a Wall Street guru. I'm just a regular guy who figured a few things out. The big thing that I like to focus on is how can we get the most out of our opportunity from the stock market in this case with the minimal amount of time? Because what I don't want to do is be flicking through chart after chart after chart, aimlessly, mindlessly, zombie-like, wondering if this or the next chart is the one. So I've spent a lot of time trying to figure out what am I looking for? And we're going to look at this later on. What am I actually looking for? What's the end goal, the end results? And it's not money. Money is a byproduct of process. So we need to know what the process is. What are we looking for? What's the completed product? And I often refer to what I do as a production line, and that makes it simple to replicate. It seems complex, but trust me, it's not. Just like when you first learned how to drive, it seems complex, but the reality is there's a system there. There's a process. There's rules of the road. There's certain things that you've got to do to shift up gears, shift down gears, be safe on the road. And it seemed really complex when you first learned how to drive. The reality is you probably don't think about it now. And that's where I am. Like, I'm not really thinking about it a great deal. It's just, oh, there's the opportunity. That's what we're looking for. So that's what we're going to look at. Again, I'm just a regular guy who figured a few things out. Most people call me or may refer to me as a more of a lifestyle trader. And what that means is I put my life first. I mean, I like relaxing. I like reading books. I like just having that downtime. A main motivation for me is just having peace of mind. I have personally, I've got Crohn's disease. That's where this process all stems from originally. So I get tired and fatigued reasonably regularly, even though it's not technically active. But it's just one of those things I have to live with. So I want it for myself first. And it turns out that, hey, you get to replicate and get the benefits of me, on the hard right edge of the chart for years trying to, figure it out. I did it the hard way. Looking back on it, there's certainly an easy way, and I'm going to show you the easy way right now. I have been trading full-time since 2001, hand-drawing charts since the 90s, calling all my trades out, or most of them, since about 2004. I've managed private client accounts with trading funds with assets under management of around 10 million. Again, all I'm really trying to highlight is, it's not my first rodeo, as the kids might like to say. I've been doing this for a good amount of time. I'm closer to my third decade at this than my second, which is a scary prospect as the feathers start to turn a little bit grayer than they did previously. But one thing I am completely passionate about is that bottom line there. I am obsessed with helping you see the type of success that I've got, your own production line process. And that's what we're going to focus on today, is panning for gold. So that's the preamble. If you do need further help with any of the things that we speak about today, I do offer extra services. As with anything, it's not for free. You get enough in these sessions to go away and do it. But if you do want my time and my attention, that's what you're going to pay for. You're going to pay for my time, just like any other experts who's been doing it for nearly 30 years. Nonetheless, I do give a good amount of my time to serious traders. So if you are a serious trader and you just at the very least want pointing in the right direction, I'm very happy to help you navigate the the waters. As I alluded to a moment ago, there's just a few more slides and then we'll jump into the live charts. As I alluded to, it's a process, what we do. It's a production line process. Step one, checkpoint one, for, stage one, however you want to phrase it. It's an algorithm is the posh way of saying it. It's just a systematic process to find, filter, and sort opportunities. And my production line is or has 4 components. The first step is a mechanical assessment. We're going to focus on this part this week. And it's a mechanical assessment. What's my reason for looking at the charts? What's my reason for looking at the chart? And we need to know what the end result is. We're going to look at that, and then we're going to kind of work backwards to figure out, okay, well, how can I find something that looks really, really interesting that meets a very strict and rigid and specific set of criteria? And this puts 2 or 3 opportunities in front of me every day or every other day. And we can, as I've, maybe mentioned in previous weekly workshops, we can, this is where we can turn a dial. We can speed things up. We can slow things down. At the moment, I'm slowing things down. I'm being very restrictive with my own trading. As always, I'm looking for one good trade every day, whether it's with swing trading, which is what we're going to focus on this week, whether it's day trading. I'm just looking for one trade. So that's a dial, a quality control that we can turn to be more restrictive. And as we said last week, it's not about how many trades that we can place, because we can find anything to trade. We can just literally fire trades off, pew, 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 trade, and not all of them are great. So we want this quality control, and we can mechanize this process. We're going to look at this in a moment. And then the second part to this is visual confirmation. Is it doing the thing that we're expecting to see? And we need to know that end result first, so we can almost play a spot the difference game. If you ever played that game when you were a kid, you've got the completed picture on the left, for example, and then a partially completed picture on the right. So we're just trying to fit, where is the partially completed picture in the process if we were to overlay it on our completed picture? And that's what we're going to do. We're going to focus on the mechanical step one, our reason for looking at a particular opportunity, or then we're going to look at that visual confirmation. The rest of the production line goes as follows. Then, assuming that all the other checkpoints are met, we would look for an entry opportunity. And then the final stage is the management of it. It's either going to time out, target out, or exit out. There's only 3 things that could happen. So it's either going to time out, target out, exit out. Timeout takes too long to either do what we think or even trigger the trade. It's going to go to target, does exactly what we think it's going to do, or we're going to exit. It doesn't quite do what we want it to do, and we stop ourselves out. Because again, we don't want to hold on, diamond hands, hope and pray and wish that it's going to turn around. Let's just close that trade and move on. There's so much opportunity, and we don't need to wish ourselves successful. We just want to close it out. Just like again, a real world business, you would, okay, this stock, this produce, this product line, it's not selling, it's not working. If it was fresh produce, it's we've not sold it quick enough. All these same principles apply in the real world. You can find a comparison to a real world business. And that's what we're doing, is we're trying to take the things that are known to work, and we're making them relatable in the world or the trading worlds. And it's still a business. And I think the more that people come round to this idea of trading as a business, so we need a process to be successful. The sooner that you can come to that realization, then the better it's going to be. So mechanical scan, visual confirmation, find an entry essentially, and then manage the trade either for a positive return or a monetary loss. Again, just thinking about the wording that we spoke about last week. Was it last week? Yes, last week. Manage your ability to place tomorrow's trade. And we want to, again, manage the trade as effectively as possible. Anyway, that's my production line. That's what we're going to look at. We're going to focus on the first 2 steps, mechanical scan and visual confirmation. So let's go and do it. Here's one I prepared earlier. So this is our regular model. And if you follow along with what we're doing on a week by week, month by month basis, I've been doing these weekly workshops for quite a few months now. But we're going to use Twitter as our model example of what we're looking for. Again, the first thing that we want to do is we're looking at here, number one, are the average prices crossed over? Yes. Great. The next thing that we're going to do is we want to make sure that the average prices have crossed over for about 40 days. So that's going to be our point number two. And I've recorded this in detail in the past, so I'm going through it quite quickly so you can go back and look at the longer version. I'd just rather spend more time scanning for stuff and showing you how to do it. So I'm going to show you two ways to this, but again, step number one. Number three is that we want to see that it is actually moving up. So we want to look at the percentage change over the last 90 days. So we're going to look for the average price crossing over. We're going to look for it needs to be crossed over in the last 40 days. In the last 90 days, it needs to have been moving up. Great, that's what we want. Then number four, this last part, let me just change colors. This last part here is we then want to see the stock having moved down in the last 10 days. So down in the last 10 days. And this is our, and we're looking for around about 10%. It's not essential, but that's just one way. The second way is that we're below the 20 or below the 50 period moving average, below the 20 or below the 50, but still above the 200. So we're looking for that retracement, and that's all we're looking for. So there's two ways that we can look for retracements in the context of an uptrend. And this is the footprints that we can find. And depending on whether we're looking at this kind of first phase here or this second phase here or this third phase here, and right now we're in another retracement phase. So we're looking at this as a potential footprint for our idealized, this is what I'm looking for. So let me just rest there. Let me just pause there. Does this resonate, folks? Just pop a yes in the chat box. So we're keeping up. You're all happy with the logic, but we need to know what we're looking for first before we can go and look for it. And I think it'd be fair to say that most people don't teach it. They just go, here's a scan, here's a widget, here's a thing, but this is what we're looking for. So when we know what we're looking for, thanks for all your comments, folks. Appreciate it. Thank you. Thank you, David. Rodrigo, of course. Hello, Rodrigo. Hello. But this is what we're looking for. And even when I'm doing a day trade scan, when I'm looking for something like, is it interesting for me to day trade? I've got this picture at the back of my mind as well. So even though I'm doing a lot of day trading at the moment, when I'm doing my top-down approach, this kind of like a similar production line for day trading, is it interesting today? The visual inspection part is like, could it also be a swing trade? And if I find that, then I can maybe scalp into or day trade into what could be a great swing trade. So I can really maximize the opportunity if I've got time. If you don't have time, no big deal. You can just stay on the daily charts. That's fine. So that's what we'll do. So this is our idealized example. This is what we're looking for. This is the perfect scenario. So the last time that we did this, we found HES. And to be fair, Twitter right now is a good example. So I'm just going to go over here on the watch list, over there. So over here on the watch list. So what I'm looking for is, bear with me. So what I'm looking for is there's the average price is crossing over. That's one of the things. So that's what this box is saying here. Is and has the average price crossed over? That's what that is showing. Okay, cool. Yes, it has. It did it 172 days ago. So that meets the first criteria of it has been in a trending state from the average price point of view for at least 40 days. Great. That's check mark. Great. Then I can look at this column here. Let me just change colors. I can look at this column here on the right. And all this is doing is saying in the last 90 days, has the average, has the stock price moved higher? So again, Twitter, just looking at this row here, it's up, well, right now, it's up 52% in the last 90 days. So it's only looking back over 90 days. So it's only looking back over about that much. I mean, visually we can see it's going up, but that's what it's telling me there. And then we can look at these three boxes over there. So we've got a red, a blue, and a blue. So this is telling me, okay, where's price right now? Where's price right now on Twitter in relation to the moving averages? It's the 20, the 20 period, the 50 period, and the 200 period, respectively. So what we can see, if I'm just trying to, we can see we've got a red box on the left. That's what's over here. We can see a red box on the left, and then it goes blue, blue. So what it's showing us is that price is above the 200, it's above the 50, but it's currently below the 20, below the 20. So that's what it's saying. So that's what this color sequence is. It's just the way I coded it up. I had this custom coded. I'm more of a visual person than a numbers in an ironic twist. I'm more of a visual person than a numbers person, but that's what it's showing me. So I give this to all my students. There's no extra cost for this. It's, I want it for me first, but I find it really useful. And all it is, it's like, where's price in relation to the moving averages? So I'm looking for red, blue, blue. So that's going to find me stocks like Twitter right now. The average prices have crossed higher. We've been in a trending state for at least 40 days. It's up about 25% in that same period. Great. So we know it's trending. And then in the last 10 days, 10, 15 days, it's down 10% in 10 days, or it's below the 20 or the 50 moving average. So we've got two choices. So the other possible scenario is I could see red, red, blue is one of the kind of the combinations. And that would mean that we're below the 20 and below the 50 period moving average. So that's what we could look for. Now, last time we did this, we found row number 5 here, right there, the one that I'm highlighting now. Over on the watch list, we found HES as one of our models. And what we did is we modeled this early part of a new trend, essentially. So we had the average price, we had the days in the mechanical trend, we had the prices actually moving up, and then we had the retracements below the 20 or below the 50 period moving average in a short space of time. In other words, a dip in an uptrend. Dip in an uptrend. So does everyone get what that means? And all we're really doing is we're defining what BTFD is by the bleep dip, by the dip. I don't know why I censor myself. I've got no problem with swearing, but by the dip, BTFD, that's what we've done. This is what this means. And all we've done is defined what buying the dip looks like to me. So it means that anything that doesn't meet those criteria, I can let go. I can leave it. So does this make sense? Does this resonate? Does this ring true for everyone? Could you, more importantly, if I stepped out into the road and got knocked over by a bus accidentally, God forbid, it never happens, but could you replicate this quite quickly? We've defined everything that we're going to do. Just pop a little yes in the chat box. Let me know that you're following along. And, could you replicate this? Check, check, check. Has this happened? Yes, 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 yes. Great. Perfect. Nice and simple. So when I think a little bit of a sidebar, I've had about 60 emails or questions or comments in the last 5 days. How do I find stocks? How do I find opportunities? And I remember when I must have been 19. I was in it was a sunny Sunday morning, Blockbuster Video. I was probably nursing a hangover. And I remember reading Jack Schwager on futures. I don't know why this particular story in my life, but this was a turning point for me. If you're not familiar with Jack Schwager on futures, he's a very popular author. He wrote some wonderful books, interview series books, very, very good interview series. But he had this book on technical analysis, Jack Schwager on futures. And it was a 1,000-page monstrosity of a book. And I was probably reading it for about the second or third time, and none of it made sense. But the question that I was left with, the epiphany that I had, was at no point in this 1,000-page monstrosity. And if you bear in mind, this is like pre-digital. This is back in the 90s. This is pre-digital. It's a physical book. I could quite literally mug someone with it. It was a heavy tome of a book. And I'm reading it and I'm thinking, at no point in this book, this monstrosity of a book, does it say anywhere how to do any of the things that it's describing. All it does is say, this is what's insert name of pattern. This is what it looks like. It doesn't tell you how to find those things. It only tells you after the fact, after it's happened, the picture perfect example of what the author is trying to describe. And of course it's picture perfect. It's called textbook for a reason. It's out of the textbook. It's a textbook example. And as a new trader, or back then an aspiring trader, it's like, that's difficult to try and replicate, because in your mind, you're looking at the perfect example afterwards. This is what it looked like 6 weeks ago. Great. That doesn't help me in the slightest. So what I'm trying to show you here is, now that we know what the picture perfect looks like, let's pretend for a moment that we can't see any of this. We can't see any of that. Anything from, well, even up to this point, we don't want to see any of that. So let's pretend that we can't see it, because now we can say, well, what does the chart, what's the footprint at this point here? And moments later, after doing this, I realized that that's probably not the best visual aid ever. But that's what we're looking for. It's like we want to find the stock at the left side of that. So that's what we're looking for. That's our footprint. Or if we wanted to find the next day, we're looking for the stock when it's at the left of that line, or at the, you get where we're going, this at the left of that line. So we've got, to the left of each of these lines is what we're looking for. And this is where we are right now. Like, we found the footprints here because we knew what the footprints looked previously. So this is the biggest difference between someone who talks about the theory of it. Yeah, this is the picture perfect example. Great, that doesn't help me in the slightest. Okay, I know what it should look like afterwards, but how do I find it before? This is what we're showing. So this is what we've got. So now that we know this is our completed picture. So Twitter is our example. Twitter is our example, is our footprint. HES is a stock that we found. So let's go to HES. This is what we found quite a couple of weeks ago now when we last did this. There's our average price. There's our crossover. It's going up in the last 90 days. Great. We had a retracement in the context of an uptrend. Great. It's starting to push higher. Great. There's our entry. And it moved higher. It did exactly what we wanted it to do. And right now, it's doing it again. It's retracing in the context of an uptrend. And that's what you can see here. That's what you can see here. So we're going to do all the heavy lifting in the watch list. My universe of stocks is, I'm only looking at the currently 270. There is more stocks in the world, as you know. I could look at stocks under 50 just for reference. So all I'm trying to say is I'm not doing this on every stock. I'm just looking for my pre-filtered universe. These are stocks that have options because I'm going to trade a stock option. They're over $50. That's one of my criteria. They're liquid. They have an average trading volume of around about 1 million shares. And that gives me this list of stocks. That's it. It's not every stock that could meet that criteria. These are just stocks that have weekly options. I would probably have about 500 stocks if I included the stocks that only have monthly options. Again, why that criteria? Because I'm looking to trade, instead of trading stock, I'm looking to trade a stock option as an alternative to stock. So let's think about our footprints. Again, we're looking for something that, like TESS here. Again, we're looking for our average, we're looking for the up, we're looking for the down, blah, blah, blah. We've just been through it. So let's look at that first criteria. This column here on the left that I'm just highlighting, white background, all the stocks there that are below, in fact, no, my apologies. Let's start with the direction. The overall direction of the stock needs to be bullish. So what you just saw me do there very quickly, We're 25 minutes in. This takes longer to explain than to do. You're going to see me go through this reasonably fast, and I'm going to use my watch list like a spreadsheet. So I've sorted all those stocks that have an average price crossover. So that's the first step. Check. Done. Now I'm going to look for, well, I only want to really find, so I'm doing this out of sequence than what we've just been through. I'd like to zero in straight away on stocks that are retracing. Cool. Let's do that. So I'm going to take this left column. So now I've sorted, I've put a little, you just saw me do it. I put a little break in to separate. Okay, these are the stocks that are currently in a bearish average price crossover state. So they're going down, so I can look for bearish opportunities. And now what I'm going to do is only the bullish directional stocks I'm going to sort that are below their 20 period moving average. There we go. So that left column, you just saw me do it. That one there, they're below the 20s. Great. So now we're below the 20. That's the criteria. I'm going to look for this time above the 50. So the middle column is saying, where's price in relation to the 50 period moving average? So let's do that. So now all of these stocks, and everyone see how easy this is. All of these stocks have that relationship. They're below the 20 period. They're above the 50. And the last one is kind of automatic because we already done it, and we're above the 200 period, but we can just visually check. Is there any red boxes in that third column there? No, there isn't. So everything is looking like this picture from a mechanical point of view. So this is our mechanical step. Let me just go back. That's the mechanical step on our production line. Longer to explain than to actually do. Does everyone get that? So what I've found is average price crossed higher. It's in a trending state. It's been going up in the last 90 days. It's retracing in the context of the uptrend. It's below the 20 period moving average, but it's above the 50 and above the 200. That's what we've done. And that gives me about 30 stocks. 30 stocks out of 300 that meet that criteria today. That's pretty cool, right? So now I can either further filter or I can go and visually inspect. Now, would it be easy for you to flick through 30 charts today? Or maybe just this week, let alone today. You could do 5 today, 5 tomorrow. You could split it over the week, but it shouldn't take you more than 5 minutes to go through 30 charts. I'm not going to spend all day trying to figure out how to trade those 30 stocks. Again, remember, I'm looking for something that looks like Twitter or something that looks like HES. These are our model examples. Let's go back to Twitter since that's all I've been focusing on. So all I'm looking for is keep this picture in mind. Does or will any of the 30 stocks that we've got here, are they going to be looking like any part of the chart here? So I'm looking for one of those 4 segments when I go and look at the chart. Where is it in relation to Twitter? So let's just think about this first section. Section number 1 here. So I could look down this DIT column here. So I had this custom coded. And I can say, okay, well, I'm looking for a stock that's at least 40 days in trend. And I've got one there. I've got one there. That one's got 20. That one's got 60. That one's got 40, 50. So there's actually, if I'm looking for stocks in a brand new early stage trend, number 1 right here, I've only got 1, 2, 3, 4, 5. I've only got 6 stocks to look at. Does that make sense? I've not looked at the chart yet, but if I want to find, if my priority today or this week is, let's find 3 or 4 stocks that are in that early stage trend. That looks cool. I like that. 6 stocks out of, again, we took 300 stocks down to 30. We took 30 down to 6. Could you look at 6 charts today? Pop a comment in the box. Could you look at 6 charts today and it's not time intensive. From the moment I said this takes longer to explain than to do, and then we went and did it, so I showed you what we were looking for, we've spent 6 minutes so far. We spent 6 minutes, and I've explained what I'm doing as I'm going. So this is in reality take you 2 minutes, but let's just say that 6 minutes is what we've just taken. 6 minutes to find 6 stocks that may look like this area here. Should we go and look at them? Yes, we should, Phil. Let's go and do it. So let's put those stocks at the top of the list. So now I've just resorted by the days in trend. So the average price has crossed over for anywhere from 19 all the way up to 60 trades. So those charts there should meet that criteria of number 1 or number 2. You know, it could be going from one to the other. But that's what we're expecting to see on those 6 charts. Let's take a look at GSX. So does it look like Twitter? Does this chart, pop a comment, yes or no? Does this chart look like Twitter? At any point of the charts, does it look like Twitter? Yes or no? No, absolutely, Michael. No, Duncan, spot on. Yeah, it's a simple question. Does it look like, this is the visual inspection, spot the difference. Does this chart look like Twitter? No. Now, I'm emphasizing this next part for dramatic effects. This is where the novice trader trips up. This is now you're not novices. You now know this. You can park yourselves under the aspiring professional category. But the novice trader who doesn't know their arse from their elbow, they're going to now spend 3 hours trying to figure out, how do I trade this chart? And what we've just done is, does it look like Twitter? No. Well, how can you trade it if it doesn't look like what we expect it to? This is why that visual inspection is important. The mechanical criteria, they're very clearly there. But when I go to visually inspect, it doesn't look like the picture on the label, Twitter. It doesn't look like our model example. So this is what we do with this stock. We leave it alone. I don't want to spend 3 hours now trying to figure out, should I trade, GSX? Should I trade that chart? How do I trade that chart? I can't trade that chart. And that's the mistake that most novice traders make. And just the simple ability to move on. Does it look like Twitter? No. Move on. That's it. That is for so many people, and it frustrates the crap out of me. For so many people, that's the hardest thing to do. What I'm looking for is this experience. Same question, folks. Does this chart look like Twitter? Early stage trend. Does this chart look like Twitter? There's our average price crossover. It's been in trend for 40 days. It's going up in the last 90. It's retracing below the 20. That's what we're expecting to see. Above the 50, above the 200. Does this chart look like Twitter? The kind of box number 1 on Twitter, the early stage trend. Pop a comment in the chat box. Multiple yeses. Cheers, Duncan. David, thank you. And Kevin, yeah, absolutely. Yeah, Kevin's, it looks almost exactly like the kind of the early stage trends that we were modeling on Twitter, almost exactly like it. So does the bit on the right, that the incompleted picture that we're looking at right now, does it look like our completed picture on Twitter? Yes, it does. There's no coulda, woulda, shoulda, maybes. There's no, well, if I turn my head to the left slightly, close one eye and squint, maybe, because that's what we had on GSX. Does it look like Twitter? No. Next chart. Does XOM look like Twitter? Yes. Great. Well, I'm still not thinking about an entry. That's step number 3 in the production line. What I'm going to do is I'm going to go XOM. I'm just going to pop it up here on. I'm going to put some space, give myself some space on my little watch list. Okay, XOM, I'll come back to that. I don't need to worry about it. I'm just creating a short list. I'm just panning for gold. I'm just looking for something to trade. So let's do it again. XOM, what's this one? VLO. Same sector, so probably not unsurprising that it's highlighted. Does this look like Twitter? Yes, it does. VLO, right? Okay, shortlist, great. PSX, it looks like we've got the energy sector retracing in an uptrend. So PSX, another energy sector stock. Does it look like Twitter? Yes, PSX. Great. Pop that on the shortlist. Let's go to CVX, Chevron. Does it look like the picture on the label? Does it look like Twitter? Yes, CVX. So now I've got 4 visual inspection. This is all we're doing. Let me just go back to my. So we found stocks that meet our mechanical criteria. So now all I'm doing is this is step 2, visual confirmation. Does the completed picture, can I overlay that at any point? Oh, sorry, the other way around, isn't it? Can I overlay my short list of stock? Can I overlay that on any of our model areas on Twitter? That's what we're looking for, visual confirmation. So this is what we're doing. Does CVX look like? Oh, what have I done? There we go. So does, where are we up to? CVX. So COP, again, energy sector. I think the whole energy sector is retracing in the context. So does that look like, and there's HES, there's another model trade. So it looks like all of these are retracing in the context of an uptrend. Great. WB, we found this last week. You can see that we've marked it off. Retracing, this time it went below the 50-period moving average. We can look at that on the next phase and the next step, but that looks great. You know, this is a candidate for us to trade. RCL, not quite. Looks a little bit different. Doesn't mean we can't do anything with it, but I'm looking for kind of not necessarily perfection, but that's probably the best way of describing it. Does it look like Twitter? Yes or no? Does it look like Twitter? Yes or no? Well, not quite. Shake Shack, does it look like Twitter? Again, not quite. It looks a little bit different. Again, we've got a trend. It looks like it's retracing. I'd probably wait for a breakout. Meets one of our 6 trends that we look for. We've spoken about in past. It's conveniently called 6 trends to profit from trading. So does it look like Twitter? Yes, it does. Caesars Entertainment. Cool. Does Disney look like Twitter? Yes, it does. So it looks like all of these can be kept on a shortlist, with the exception of probably 2 or 3. It looks like most of them, well, there's Twitter. Twitter's flagging up. Our model trade is flagging up with our model. What a surprise. Are we going to miss trades? Are opportunities going to fly by? Are we going to catch every opportunity? No, we're going to miss things. We're not going to catch everything, but I think there's plenty to be getting on with. So there's a few trades there, the few opportunities that didn't look like they made sense. Let's go back to Twitter. Twitter was actually one of our things. So now we've got that. Now that we've got our shortlist, the shortlist is over there. I've got 10 possible trades. 10 possible trades. Now, the one I refer to as they're not today trades, they're just shortlisted. They're not today trades. I don't need to take action on it right this second, because the next part of the production line is to wait for an entry. Again, I've got 9 patterns. Again, it's a little bit beyond our scope of our session today, but the next part is look for an entry. Wait for an entry. Again, it's not today. I've just got 10 things to look at today. I've confirmed that, yes, they're doing the thing that I'm expecting to see. They look like Twitter. Great. Now wait for an entry. Now, the great part about having a model, we're using Twitter, TWTR, if you want to look at it. We're looking at Twitter to find those opportunities. So now if we found stocks that are all somewhere in the middle of these yellow boxes, which is where we're at with Twitter right now, somewhere in the middle. So we found stocks that are all candidates at some variation to the left of these vertical lines. So now what we get to do, because we've got the footprint, we know what we're expecting to happen next. I can look at the right of those vertical lines and I can anticipate what may happen next. So I can look to see, how did the chart unfold? How did the chart unfold? That's what I can look at. And I can decide to, well, think about my entry as price starts to move favorably, which is what it's done previously. So is it starting to move favorably? And you can see what I've got here. I've just got a line in the sand. And I've said to my insiders, I'm looking to be bullish above about $70. I don't have to be precise with it. And this blue box here, I've just pretty much picked that as price goes back above the 20-period moving average, just to keep it nice and simple. Like if it goes above there, I'm going to look for an entry. That's it. Until it does that, until it proves that it's moving higher, then I don't need to worry about it today. So today, it's still well below. It's a couple of dollars below the $70 trigger level that I've identified. I probably don't need to worry about it today. I could set an alert if I want to. I can do this for all of the stocks that I'm doing. So let's just take a look at some of these energy stocks. So right now, do I need to do anything today? No, well, there's the 20-period moving average. So if it goes back above the 20, I'll reconsider it because that's what happened over here. So we've got our average price. It rallied, it retraced, it went back above the 20. So I can get in there. So I'm looking for something similar to happen. I'm looking at history to repeat itself. It's already proven itself. Like this is what happened last time. The most recent time it did it. Great. Let's see if it does it again. So right now, it's still retracing. Do I need to worry about it today? No. Guess what? Come back tomorrow. It's not a today trade. It's a let's check in tomorrow trade. Or I appreciate it's Friday. Come back Monday. Check it over the weekend. PSX still retracing. So now you've got this short list of stocks that you can explore. And this is the thing with swing trades. They're currently retracing in the context of an uptrend. The energy sector seems to have been highlighted, which is interesting to see. And what I can also now do, again, we've got this secondary list of stocks here. And I can sort by, are they above or below the moving average? So now let's do the same thing. Let's go back to Twitter, TWTR, there's our model. So now I can look for those stocks that are below the 20. Maybe they're below the 50. So looking for a stock that's in that zone right there. So below the 20, below the 50, but above the 200s. That's what we've just done there on the watch list. Again, it took seconds to do. And now I've got more stocks than I can shake a stick at to worry about. So what do we do? So now I've got about 70 stocks here. Whoa, I ain't got time for 70 stocks, Phil. How can I filter those stocks down into a sensible list? Which ones do I need to look at today? Well, that's where these percentage change columns come handy. So I can sort all the stocks. So I know that, let's take a look at Apple. I know that all of these stocks look like Apple. Apple, great example. It's below the 50. It's below the 20. It's above the 200. So there's the 20, there's the 50, the 200. So what I want to see is that time where price is moving back above the, or starting to move higher. So all I can do here is when one of the reds turns to blue. Does that make sense? When one of the reds turns to blue. Because if you're swing trading, you're making these decisions at the end of the day. I can come back on at the end of today when I've got a new piece of information, a new daily bar has completed. Maybe I come back and I'm just making an example up. Maybe I've got blue, red, blue. So it's gone back above the 20. It's still below the 50, but it's above the 200 because they're kind of reversed round. So maybe that's the first sign. So I'm going to have this I'm going to have this blue, red, blue combination. That's what we've got down here. That's what we might see, for example. And I'd say, okay, well, it looks like it's going back above the 200. It's still below the 50, but it's back above the 20. Cool. That's what we might be seeing. So that might be suggesting that, you know what, it's starting to move higher. The other way that I can do this is I can rank and sort the stocks. So here, so this particular column is looking back at the percentage change over 3 days. It's looking at the closing price 3 days ago, and it's looking at the closing price. In this case, I've got it set to yesterday. I can have it show me right now. I can set that up to real time. So it's going to look at update intrabar. So it's a live reading now. And I can look at stocks in that column that are in the last 3 days moving higher. Let's sort them by which ones are moving higher. So these are all retracing in an uptrend. But in the last 3 days, there's only 1, 2, 3, 4. There's only 5 stocks that are moving higher in the last 3 days. The one that catches my attention. So this is this first one here. It's up. Let's read it. Bullish uptrend. It's been in a bullish uptrend for 109 days. It's above the 200 period moving average. It's below the 50, below the 20, but it's up 3.5% in the last 3 days. That's pretty cool. That looks like it may be starting to resume the uptrend. Let's take a look. So that's what I'm expecting to see. Now I'm looking at it, visual confirmation. It's not quite there. It's not quite there. It doesn't quite look like Twitter. However, now I am looking at it. So, I can see in my case, there's a lovely downward channel. Okay, so it's not perfect, but I can recognize that, okay, it is going up, but it's got this downward channel. So maybe in this case, I wait for a breakout because you've got a very clear consolidation in the last 3 months. I've found an opportunity. It's not today trade, but I can pop that on a watch list and say, okay, well, this is going to be one of the 6 trends that we look at. What's going on? Now I'm looking at it, visual inspection. It's going up, down, sideways. It's going in a range. It's sloping range. We'll call it a downward channel. Great. Wait for the breakouts. That's it. Wait for the breakout in the context of the predominant trend. Does this make sense, folks? That's all I've got to say on the subject. This is how we can scan for opportunities on a regular daily basis. This is how we can scan for opportunities on a regular daily basis. Now, what if you don't have the fancy software like Phil's got? This is TradeStation. It's a paid product. I'm not affiliated with them in any way. All my students get copies of my templates and layouts. You get all the custom tools for free. Selfishly, it's so that I don't have to provide support, but there we go. Don't tell anyone. It's a secret between you and me. But what we can do, what if you don't have the fancy software? Well, there's lots of scanning tools, and I mentioned Fimmers again. I'm not affiliated with them. I'm not getting paid to say this. It's a tool that's out there right now. What if today's your first day and you don't know which software tool that you prefer? You can go to Finviz, Finviz. You can go to, where is it? Screener over there. They do have a paid version, which I think gets rid of all the adverts because they're a pain in the arse, but what can you do? Hey, for free. I'm not even logged in. You get access to this for free. I'm going to click on all. You've got a few varieties. Now, don't be put off by this. Don't be put off by the number of choices that you have available. So all I've done is gone to Finviz. I've gone to Screener, and there's a tab there that says, show me all the tools. And just in the middle here, you've got 20-day moving average. You've got the 50-day moving average. You've got the 200-day moving average. Where else? I think there's one more that we need. Percentage change. I can't see it easily. Change. There we go. Change. Oh, it's all on the same row. There we go. So change. If you want to look for any particular stock pattern, like we found a channel, a rising channel. Descending channel. So you can look for all sorts of things. Again, you can have it scan for all sorts of great stuff. So you don't have to do it. So what we want is prices below the SMA. There we go. So above the price is above the 50. There we go. And above the 200. Ding. Did you see that, folks? Simple. Check, check, check. The next thing that you might want to do is trim off the add volume, because this, keep in mind, this is searching the entire universe of stocks. So what I would add in is stocks that have volume. I want average volume. So where's average? Average volume. So I don't want current volume. I want Oh, there we go, right there. So average volume. So over 1 million shares is usually what I like, average volume. It's just a nice way to trim the universe of stocks. You're going to get rid of the penny stocks, the low floats, the stocks that are pretty much dead in the water. But it's going to give you a list of stocks. So there's 272 stocks that meet that criteria. It's still a bit big, but then you can start saying, okay, now I've got my little universe that meet that criteria. I also like stocks that have that are over a certain price. So target price. Nope, there we go, price. So I want to get rid of all the penny stocks is what I'm doing. Let's just take it to over $20. So I'm going to get rid of all the shitty penny, low float, crappy stocks that, you know, unless you actually want to trade a $10 stock. There's nothing wrong with it. It's just I don't want to do it. I also like stocks with options, as you know, as I mentioned earlier. So maybe I can do that. I know there's a feature somewhere on the right here. Where is it? Trying to quickly do this. But again, if you just go down and read the things, we can probably find, I can't find it quickly. I know it is here. But relative volume shares outstanding, optionable. There we go. So I can find stocks that are optionable and shortable. There we go. So that's going to take my list of stocks down to something sensible. So easy peasy. Now, the next thing that you can do, again, one of the things that I only realized this, you can actually, in the bottom center, so now I've got this list of stocks. You don't have to do anything. You can click on the chart there, and there should be an export button. Oh, there we go, right there, bottom left. So you can export those stocks and bring them into your preferred charting platform if you want, but you can do all the heavy lifting very, very easily. Now, I think it looks like I've got, looking at the country thing, there's a few island stocks, there's a few, so it's actually scanning worldwide. Let's just change that to USA. Cool. So now I've got a sensible stock list, trimmed it down further. It's only stocks in the USA. Cool. Let's go on to the chart tab. Will it work? Is this free? Oh, there we go. Got to put up with an advert first. There we go. So I can see very quickly. Look at that. Look at that. That's awesome. I can go to all these stocks and very visually say, does it look like Twitter? Does it look like Twitter? Yes or no? Does it look like Twitter? Yes or no? You can do that. You can look through a lot of stocks very quickly. Is, I think, a huge advantage, especially if you've not got the fancy chart software. Oops. If you've not got the fancy chart software like I have, but you've got some extra opportunities that maybe you might not have considered, just because, like, I create a universe of stocks that's relevant and relative to the things that I want, but maybe you don't want to trade a $70 stock, or you want to trade in the $5 to $15 stock range. So, you know, you can add in all sorts of extra filters. So the great thing with FinViz is I've got this at the top there. I've got a nice little URL, and what I'll do is I'll copy that and I'll paste it over into my little trader community. So if you're not a member of this, it's a free Slack community, but I'll put that in the Slack community. So it gives you a starting point, so you don't have to worry about which buttons to press and what to press. I can basically just copy that and paste it over into here, which is what I'll do right now. There we go. And, you know, if you want a copy of that link, there we go. So stock screener. So if you need it, it's right there. So you've got this nice little template to start with. It means that you don't have to figure out which buttons to press. And what did Phil say? I've just done it for you. You can go and take this scan very easily and very quickly to get you going. And I think that's it. We've got everything. So what we were looking at today was panning for gold. How do we find opportunities? How do we find stocks that make sense? In this particular case, we've been looking for swing trades. We modeled the perfect trade, or our idealized stock that's in motion based off Twitter. And then we said, okay, well, what's the footprint? What's the secret blend of herbs and spices that went into Twitter? What are the hallmarks that showed that Twitter was on the move and moving, and maybe there's an opportunity that I can profit from? That's what we did. That's what we went and saw. And then we took that footprint and we went and panned for goals. We went and scanned for opportunities. I used TradeStation, and that is the tool of choice. All my students get access to the tools and all the customizations. And if you want the FinViz version, it's right there in my little community. You can quite literally click the community link on any of the emails that you receive from me. If you just scroll down, it's near the bottom somewhere, join the community, and it's in there for free right now. So that's what we did. And the whole purpose is to try and help you with your own production line. So my production line is mechanical scan. That's what we did. Visual confirmation. That's what we did. Then we want to wait for an entry a little bit beyond our session today. And then we want to manage that bad boy when it's in motion. Now, for some of you, you may have got everything that you need from today's session. But some of you may need some extra help. And if you need extra help, just know it's available. Lots of people get everything that they want from these sessions, but if you need just that little bit of an extra hand, a little bit of a helping nudge in the right direction, I do offer to help you find the perfect day trade or the perfect swing trade. And if you want to learn in the smartest way possible, then shoot me a message. I don't know if what I do is right for you, but what I can promise you is that you will be able to zero in on the best stocks to best opportunities every single day. You've just seen me do it. It doesn't take long. It's not time intensive once you've mastered that process, and it doesn't take that long to do it, but you'll never stress over which way the market's going. It's going up or down. You'll profit in both directions. As you've just seen me do, you won't be spending hours flicking through chart after chart after chart, wondering if this is the one, and you'll never have to read through boring company reports. I hate doing it. However, if you like doing it, that's okay. It's not critical. I just don't want to do it myself. But if you want some help with building your trade confidence so that you can transition into the best possible consistent trader that you can be, would you take me up on that offer? I don't know if what I do is right for you. I like to have a little conversation with everyone just to make sure it is the right thing. Start that conversation by going to phil@antivestor.com. Or you can go to the website, AntiVestor.com. Choose your own adventure. If you need some help with the basics, what is a chart? What's the trend? How do you figure that out? You can go to the basics. If you want to learn the day trade strategy, choose the day trade option. If you want to learn the swing trade strategy, choose that choice. Again, choose your own adventure, whatever makes the most sense for you. If you're wondering which one makes the most sense, the thing I like to think about is, like, if you don't have time to day trade, there is no point you learning how to day trade. So you'll go to the swing trade. And if you don't know what a chart is, then start with the basics. Just keep it nice and simple. What do you need to know first to make it work? Anyway, let's start that conversation, phil@AntiVestor, or you can go to the website and choose your own adventure. So that was panning for gold. Panning for gold.